Joining us is Paul Hickey, Bespoke Investment Group co-founder. We're all looking at the similarities and differences of the meme rally now versus January, where it did have sort of a bigger effect on the broader market. Do you see that this time at all?
Yeah. Hey, Sarah. So I think you were talking about it a little earlier. I don't think it's nearly as impactful for the broader market here as we were discussing on options volumes. They're not nearly as high this time around in these meme stocks. And I think it's more confined this time than it was in the last time. Earlier in the year, they were looking at any stock that had high short interest and bidding it up. And this time around, we're looking at, it's more focused and centered on just a couple of specific stocks, like GameStop and AMC.
Would you tell anyone to trade around this? Would you strategize? Would you take the other side of any of these bets, given how high these valuations can climb, or is that too dangerous?
I've done some pretty crazy things in my life, but I wouldn't get in front of any of these meme stocks and try and short them. It would have been nice to own them, but I think when you look at that, there's plenty of other stocks in the market that have done just fine over the last week. They haven't doubled in the last week, but they're going to allow you to sleep at night. So I think it's, do I wish I owned them this week? Probably, but over the longer term, I would, these are more just noise rather than a broader impact on the market. I just stay away. It's fun to watch them, but that's about it.
Switching focus a little bit, Paul, you always do analysis for us on final hour of trade. What's that telling you at the moment?
For us, of course.
Yeah. So, I mean, I think we have to thank the two of you, Wilf and Sarah, because this second quarter, for the first quarter of this year, we saw a pattern in the market which was very weak, where you would just see the market, steadily rise throughout the day. Last hour of the day, we would get up there pretty high, and then in the final minutes, we would just sell off. Like, it was just very disheartening. But so far this quarter, we've seen the opposite happen. We've seen, strength throughout the day, and then in that last hour, we've seen continued strength where we closed near the highs of the day. And I think that's one of many factors that keeps us encouraged about the broader market here, that investors are willing to hold overnight into weekends, into a long weekend like today. So I think that tells you that investors have an appetite for stocks. And getting back to the meme rally that we were just talking about, investors have an appetite for stocks by what you're seeing there in some of those names. But in the broader market overall, people want to be invested in this market, and they're looking for individual stock ideas and for capital gains.
We also turn to you for some of the seasonal statistics on the market and the historical trends. How did May stack up, and what do you see for June? And how's 2021 overall for following some of these patterns?
So I think May was a middling month. You saw strength in the S&P 500, modest strength. You saw modest weakness in the NASDAQ. June historically is one of the weakest months of the year, but the thing with the market is strength begets strength. So the strongest Junes come following the strongest year-to-date gains. So when the S&P 500 is up 10% or more year-to-date heading into June, that's when you tend to see the strongest returns in June. So that's an encouraging aspect. The takeaway from May, I think, is just to keep up with your plan. I mean, we've seen such a shift in tone and sentiment towards the market and towards themes that investors trying to follow the headlines are on a road to ruin if you're just looking at the headlines and investing based on them. We have to extrapolate things, what's going to be going on down the road, than what the headlines are telling us.
Paul, if people are looking to pick up some of the tech pullback that we've seen of late, the biggest cap names, which is your preference?
So I think one name that looks really interesting to us is Amazon. It's traded in a range of about 23% over the last 200 trading days, going back to late last summer. That sounds like a pretty wide range, but for Amazon, it's one of the narrowest ranges in the stock's history. There's only been 4 other times where it's had that narrow range over that period of time. And when you're dealing with a stock like Amazon, which is just growth, 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 those periods of pause where the stock is range bound act as almost like a recharging of the stock. And following those 4 other periods where it had this similar type trading range, 6 and 12 months later, it was significantly higher every time.
Shepard Smith here. Thanks for watching CNBC on YouTube.